Well, now moving ahead, we would like to now invite Ms. Suhita Poddar, India Steel journalist, Flats Kallanish, for giving valuable inputs on Indian coil market overview. Suhita is the India Steel Markets journalist at Kallanish. She's a former financial journalist and a research analyst with over 10 years of experience across various sectors, including energy and financial services, and regions including US, UK, and India. She has an interest in sustainability and is keen to be at the forefront of covering India's transition to a low-carbon future. Can we please have a round of applause for her? We would also be having a Q&A for her, so please note down your questions and please be free to ask before the session gets over. Thank you so much.
Good morning, everyone. I'm Suhita Poddar. I'm here on behalf of Kallanish. I'll be doing a little bit of a broader market overview rather than focusing only on Coil today. Essentially, I just want to do a little bit of context setting. First is that India is one of the bright spots amongst the top 5 global producers. It's the second largest crude steel producing country. It's also the only country producing with a positive growth rate among the top 5. The reason for this is because the country has a very bullish outlook due to strong fundamentals, and it's also being supported by the government. And also a strong demand from key end user sectors like infrastructure, construction, which we discussed in the previous presentations, automotive and manufacturing. There's also been a significant change in the market dynamics in the last a year and a half. For instance, there's been a huge impact on the domestic market because of rising imports. And in Q1 of this year, prices have trended higher because of policy support from the government. However, because of international trade environment, there is certain risks that India does face, which I will focus on in the upcoming slides. Over here, I wanted to highlight how coils are very important for the finished steel sector. For instance, HR coils was the most imported item, however, galvanized was the most exported item. And in terms of suppliers of finished steel, Korea, China, and Japan were the top 3, accounting for nearly 77% of imports, whereas Italy was the largest export market for us. This is one of the slides I wanted to focus on as well, the changing nature of pricing in the market. What we've seen in the last year or so in calendar year 2024, we've seen that prices fell, HRC export prices, they fell almost 18% to an average of 518 on FOB basis. However, this trend has reversed in Q1 of this year so far, which is to say that prices are up maybe 12%, almost covering the losses from last year to 592.5 levels as on date, as of yesterday. The reason for this, we know that for calendar year 2024, it was impacted by weaker demand in the European market, which is still sustaining at present. There was also anti-dumping risks that India was facing, which as of this calendar year has changed because the EU has provided some policy clarity for India, which has also helped offset the lower safeguard quotas they have announced recently. However, India does continue to face price pressures. For instance, in CY24, China and other international prices were impacting Indian pricing for exports, and that is something that continues to impact the market till today. Onto the domestic side, HRC fell nearly 16% to an average of 7,125 in the previous calendar year. However, it's up 9% year to date. And since the safeguard duty was imposed on Monday night, it's expected to rise further, although maybe not more than 1,000, 1,300 rupees. The reason for the flats prices decreasing in calendar year 2024 was because of general elections, liquidity shortages, extended monsoons, oversupply, and rising imports. And the reason for the price correction or price increase year to date of this year in calendar year terms, it's because of the safeguard duty being imposed, which has been one of the major factors actually. Improving demand, because generally during this period there is stronger focus from the infrastructure, construction sectors, and other end user sectors. We've also seen tighter supply because of ongoing maintenance shutdowns and lower imports thanks to safeguard duty, but also non-tariff barriers. I also wanted to highlight not just HRC and CRC levels, but also plates, GI, and color-coded values. So if we look at this, we'll be launching these prices at Kallanish soon as well. So if we look at these levels, prices across the board on flats products, HRC, CRC, plates, GI, color-coded, they're all up. Here you can see that plates are up nearly 10% year to date. GI is up 5% and color-coded almost 7%. Similarly for exports, HRP and GI values are up 4 to 15%, pretty sharp. I also wanted to very quickly touch on the safeguard duty because this has been impacting the market very heavily. I've listed out what the timeline has been here. So in 19 December, the DGTR initiated the investigation on 5 specific steel products, and on 22nd January, it extended the deadline, it extended it to 22nd January, and then between January to March, there was a lot of market speculation, which is actually what helped prices increase during this period. And when the DGTR announced, or rather recommended, a 12% safeguard duty for 200 days, that also helped support prices. And as of 21st of April, it's been effective immediately for 200 days. I've been speaking to a lot of different sectors of the market. They're overall very happy with what's been announced by the Finance Ministry. However, because a lot of the prices have already been factored in between January to March and early April, there doesn't seem to be too much of a price increase headroom at present. However, that can always change depending on what the market situation is and how much tightness there is in the market. I've also listed out the table that the government has proposed on what the maximum price should be for an import price on CIF basis. And based on this, yesterday, I also made a little bit of a scenario analysis, depending on which, depending on importers looking to import from, let's say, FTA, non-FTA, or on an advanced licensing basis, which arena would be, or which scenario would be more viable for them. As you can see, based on the safeguard duty imposition, it does not seem very effective if someone tries to import from a non-FTA or even an FTA mill based on current levels, price levels. However, if someone is undertaking an advanced licensing and planning to re-export, that option is more effective. Overall, what I can see is for the domestic market, the impact of the safeguard duty has largely been factored in, and it is expected to help our lower imports. While some re-exports or advanced licensing type deals may continue, it's not going to be a huge factor for imports. So that is definitely going to help support the domestic market. Secondly, there is a factor of the indirect effect of US tariffs. Currently, we're under the 90-day pause, and India is under trade discussions with the US for the bilateral trade agreement, so it remains to be seen how that's going to impact us. However, as of now, it seems to be something to be wary of, how this will impact the market. And thirdly, capacity expansion. There's a lot of mill shutdowns currently, and there's also 2 or 3 mills who have announced their capacity expansions. So it depends on how these mills plan to expand, how they plan to meet demand, and depending on all of these factors, it's going to make a huge impact on how Q1 of this year fares. For the export market, CBAM is something to consider. So AMNS, JSW, all of the major mills have been undertaking a lot of green steel initiatives to comply better with the upcoming CBAM, which becomes effective from 1st of January. And moreover, the anti-dumping probe on India is over, or essentially over, because EU has indicated that India is not going to be affected by HRC. So that's definitely going to help with exports as of now. In fact, I was looking at the safeguard quotas for all of the flax products, and it showed that despite lowered quota allocation, India has already exhausted its metal-coated, the organic coated quota and one of the galvanized quotas for EU within like 15, 20 days of April, so Q2 for them. And finally, competition from global players like China, that's going to impact how India fares in the export market as well. I'm running out of time, so I'm going to zoom through the next two buckets. In terms of government policies, India has been focusing not just on direct measures like the safeguard duty, but also on non-tariff barriers, such as tightening policies like the DMISP. There's also a tighter focus on compliance like BIS, QCOs, and more. And finally, in terms of Q1 trends, there's a huge focus on infrastructure, which is definitely going to help demand, on focus on green and sustainable production, not just in HRC, CRC, but also in coated and other flax products. There is a rise in protectionism, which I touched on, which will be a major impact, and shifting trade flows. Thank you so much. This is very briefly on what our company does. Basically, we cover news across the world, a lot of reports. There's also a Steel India monthly that we produce, and several events as well. Thank you so much.
Thank you, Suhita, for the wonderful presentation. We really appreciate your presence. Requesting you to please stay back for a couple of minutes. Do we have any questions from the audience? Because the floor is now open for Q&A. Yes, can you please pass on the mic?
Hello. Very great presentation. Can you throw some light on position of China in the entire global supply chain and how they will react? Because as you said, there is a huge difference between the manufacturing capacity. Though we are second largest, I mean they are maybe 6 to 7 times bigger than us. And they are not going to keep quiet.
Exactly. In fact, I was at the Asia Steel Conference earlier this month, and one of the major discussions is how trade flows will be impacted because of the US-China spat that's been going on. A lot of the focus is that China will try to export more in Southeast Asian, Middle Eastern, and African regions. That's essentially one of the areas that they may try to focus on. There was also some discussions that they may come into India. However, because of the safeguard duty, that's definitely going to impact how much of Chinese material comes here. And in terms of production cuts, it really depends on what the China market says. As of now, I know the Chinese prices as of yesterday were about $4.55 FOB, which is very difficult for India to compete with in Middle Eastern, European, and other markets. So it's hard to predict what their production plans are as of now. But in the export market, India still can compete. One of the galvanized buyers in UK I was speaking to while I was in Vietnam earlier this month, he mentioned that they're looking for quality products. So one of the ways that India and maybe other countries can also compete in the export market is in terms of value-added, in providing value-added steel material, like coated products, like organic coated products, because that's one of the safeguard quota allowances that India consistently blows past very quickly before the quota period is over. So that's maybe one of the ways that India can compete with China.
Any more questions from the audience? Oh yeah, looks like that is it. Thank you so much for joining us. Could you please have a round of applause for her?